Klarna. It is hitting a, record low. It's only been public for a very short time, but right now it's down about 9% after the Swedish buy now, pay later firm released its first earnings report since going public on the New York Stock Exchange back in September, with record third quarter revenue of $903 million and 4 million signups for its debit card. Fascinating to see. We're looking at Klarna right now, and you'd think that it would be higher, but the stock is plunging after the company posted a net loss of $95 million and provisions for credit losses climbed to $235 million. Joining me now, Klarna CEO Sebastian Siemiatkowski. Sebastian, out of all the metrics, which one, because you have some good ones here, which one excites you the most?
No, I think obviously on overall being able to see the acceleration of revenue growth is amazing. So that's the greatest one. I think that like hitting over 50% growth now on an annual quarter-to-quarter basis in the US and on the total group level hitting close to 28. So those are obviously the ones that excites me the most.
So you were founded, 20 years ago. Can you tell me why you're still losing money?
Well, the truth is that, if you look at our underwriting, we also celebrate this quarter that we have now issued, over 20 years I've been here, over $500 billion of credit. And on average for that credit, we have had losses beneath 70 basis points, which I think really speaks to how leading our underwriting technology is, and we're ahead of all the banks. We have just one challenge, and that is a small bank will have smaller losses and a big bank will have slightly bigger losses in absolute numbers. So what you're seeing is as the bank grows and becomes larger, losses have to go up because we're simply lending more money. But if you look at it overall, it's a very, very healthy portfolio. And I think other big banks would dream to see 70 basis points over such a long period of time. Now, what's happening in particular in this quarter is we have gone from 60,000 merchants offering our fair financing product to doubling that in a year, which means that our slightly longer lending that goes for 1 or 2 years has grown over 140%. And there we're very, very careful. So we book the cost up front, and then we take the revenue over the time of the loan. So what you're seeing now is we're just provisioning for a lot of loans that are building our books, which is the right way to do it, but obviously has some planned profit lag on the bottom line.
Okay, I get all of that. And these numbers, again, let's just underscore that you saw active consumers growing 278 million, up 32% in the past 12 months. I mean, merchants grew 235,000. You now have 850,000 merchants. So can I just ask you, when it comes to how you are conducting business, because investors are not happy at the moment, you need to tell me, Sebastian, where you're going to make some changes so that you achieve profitability, and when will that be?
Right. So if you look at it, the company's been profitable from 2005 to 2019 for its first 14 years of existence. And what we have been doing since then is entering into the US market and investing heavily. Our gross margins have always been around, or as we call them, transaction margin, around 50 to 60%. They are in the 20-30s in the US. So it's very profitable. It's a very solid business that has been profitable for a long period of time. But as I said, as we're growing, we just need to provision for more for our book, and that will have short-term implications like this on the profitability. So I think it's very, very exciting to see the continuous growth and success of the business. And people will, the stock market will always be the stock market. Some people will understand and look through this, some other will not, and that's obviously up to each investor to make their assessment. What I know is that I see fantastic internal momentum and I see good improvements in the financials. So we're looking forward to continue delivering on that. You
refer to yourself as a bank because you have a charter certainly in Europe, but not here in the United States. When is that going to happen?
We'll hope. I think that in a world of AI, one of the things that's actually becoming more and more important is the licensing aspect. So we think it's important to have all the applicable licenses, but we haven't had a commitment in the US yet for exactly when. But it's not unlikely that that would happen, as that is aligned with that strategy of making sure that we're fully licensed in all markets. Our bank license in Europe has processed all European markets with the exception of UK. But obviously we have money transmitting licenses in almost all of the US states, but we want more licenses.
All right, let's talk about the Klarna card. The last time you were on, which was around the IPO, I think it was IPO day, you said that there was a huge long wait list. You signed up 4 million cardholders for this card. It's extremely popular. Is there still a wait list? How many people are on it?
There actually is, but I think it's pretty cool, Rook. I mean, this comes back to we've been trying to find our own way of doing a card. And as I remember, we spoke about as well, like when I used to work at Burger King, when I was 15 years old, kids would, you would swipe the card and you would press 1 for debit and 2 for credit. Now the banks removed that because when you did that, you didn't build up as much of a balance. You had less to pay at the end of the month, and then you wouldn't borrow. You wouldn't build that $5,000 credit card balance with 20, 30% interest rate. So the banks removed that. We're bringing that back. The first thing we did is bring back 1 for debit, 2 for credit. It's a debit card, but with the optionality of occasional low-cost installment-based credit. Now, what everyone says when I say that sounds amazing, but what about my perks? So what we now added, and I think that's the secret mix here, is that we are now offering a debit card with credit card perks. So we've added loyalty points and cash back and all the other things that you would expect from it. And that makes it a super attractive card. I even had over 1,000 people sign up for me physically cutting their old Amex card or whatever card they wanted me to cut a piece and actually transfer to this card. I was quite surprised about that getting such attention on X, but it was quite a fun thing to see and a lot of memes around it. So we see a huge demand for this and hitting so many active card users in the US on such, I think it must be one of the most successful launches of a card program in the US ever, actually.
It's possible. It's possible. Those are major numbers. You've also been able to reduce headcount in a major way by using AI. I saw that you had given an interview and you said that AI as an investor, because you are an investor in some of the biggest AI companies, is making you a little bit nervous. Can you tell me what you see? Because you're in an interesting position of being the CEO of a company that uses AI, but also somebody whose family fund invests in some of the biggest names. What are those names and what makes you a little anxious about what you're seeing right now? Because we've got a market that's selling off in part because of that.
It is a complex matter, and I wish I could, I wish I could say it in 20 seconds, but I'll try to keep it short. Like, look, obviously AI already is used by all of us, and we see tons of value in it, and I'm sure that a lot of AI companies will thrive and do well. It's what I was specifically commenting on was the massive investments in compute. And I think one thing that people forget about AI, it is the most effective compression technology ever created. Isn't it crazy that a big chat models that we use is about 1 terabyte? You can actually fit it on a single USB stick. And that's because it compresses knowledge. It compresses it massively. That's also why it loses precision and accuracy to some degree when you interact with it. And it is this massive compression. And when you start thinking about that same compression happening at proprietary data, the same compression happening in not generating just new software, but actually reusing components, you start asking yourselves that at least within enterprise, you could expect much less compute needs. Now, that's different because we may still want to go to an AI and say, hey, make me a Star Wars movie, but with my family faces in the leading roles instead. So there could be that consumer AI would actually motivate those investments. But I think in enterprise, it's all about cost optimization. And this compression will have a meaningful impact on the need for compute, in my opinion. But again, here, as I said, I don't want to be the one who said there's only going to be 4 computers in the world, but I am a little bit sensitive and nervous about that this may have implications on whether all of that compute will really be able to pay off to the extent as some people believe.
You are not the only one, apparently. Sundar Pichai of Google, Alphabet, saying he's got some concerns as well. And the market shows that there's a shift in sentiment, certainly. Sebastian, thank you so much. Please come back. And we can't wait to see Klarna grow and post some profits as a publicly traded company.
Thank you. Thank you for having me.